It's midweek, and this is Business Incorporated coming to you live from Lagos, Nigeria. Thank you for joining us. I'm Chimeze Obi Iwago. On the program today, South Africa's ShopRite fined for reckless lending. And Egypt's non-oil business activity contraction slows slightly in August. Plus, where is the best and worst countries to live and work in? Find out on the program. Let's get started now with the markets. The Nigerian stock market rebounded at intraday today, trading up 0.09% a day after the country's second quarter GDP shows that the economy is out of recession. However, the market in South Africa is still not moved by the impressive GDP number from the country. The JSE index was down 0.69% at intraday. The Egyptian stock market also traded low, 0.58%. In the meantime, the Nairobi stock market has overlooked the political upheaval to close in the green on Tuesday. In the Middle East, an overnight rebound in crude oil prices helped Saudi Arabia's equities index outperform its regional peers today, while shares of Abu Dhabi-listed Dana Gas gave up some of the big gains of the past 2 days. Brent oil was trading at $53.37 a barrel, slightly above its level when the Saudi market traded on Tuesday last week, just before it closed for long Eid holiday. All but 2 of the 14 listed Saudi petrochemical producers rose as the market reopened today, with Rabia Refining and Petrochemical adding 1.3%. The main Saudi index rose 0.34% at intraday. In Qatar, Qatar Gas Transport Nakilat dropped 1.5% after index complier FTSE said it would move the company to its mid-cap index from its large-cap index effective from September 15. The main Qatar Exchange Index lost 1.32%. In the United Arab Emirates, FTSE has decided to remove Union National Bank from its global equity index. Its shares were not trading today, but Dana Gas fell 2.6% on profit taking, dragging the Abu Dhabi index 0.48% lower. The Dubai index was up 0.49% as Bildad, Drake and Score, the most heavily traded stock at intraday, rose 0.8%. And in Europe, markets there were lower in morning trade, tracking Wall Street slide overnight amid a backdrop of lingering geopolitical tension. For more from the market side, let's bring in my colleague in Frankfurt, Janelle Dumalon. Good afternoon, Janelle. Thank you very much for joining us. It's another beautiful day. Now, Deutsche Bank CEO has asked the ECB to end the era of cheap money and call for the consolidation of the EU banks. So what is the position of Germany on stimulus and bank consolidation, and do you expect ECB Chief Mario Draghi to speak to this tomorrow?
Good day from Frankfurt, and you're right, it is quite a beautiful day here, and those remarks did come from a banking conference that's actually also being held here in the city. So first of all, banking consolidation is one of Deutsche Bank CEO John Cryan's favorite subjects. This is something that he's spoken about at length many times in the past years. And, you know, there is a strong argument for banking consolidation because obviously it helps banks cut down on costs and raise capital. And especially within Germany, the banking sector is one of the least consolidated. You have here over 2,000 lenders, and the top 5 only have about 30% of market share, and that results in really intense competition, especially in the kind of low interest rate environment that we find ourselves in now. And there you have the link to the cheap money and why the Deutsche Bank doesn't like that kind of policy. In terms of how many people in Germany feel this way, we can have an indication in that Wolfgang Schäuble, that's the country's finance minister, he actually came to he didn't come to the same conference, he spoke over satellite link, but he echoed those comments by John Cryan. And if I can read you what he had to say, he said, Unusual monetary policy implies it is not usual or normal. We should get back to a normal monetary policy. We have come back to a normal situation much quicker than people thought. In terms of the German position, you have Cryan saying those words, Schäuble saying those words, but also in the past years you also had Jens Weidmann. He, of course, is the head of the Bundesbank, Germany's central bank, and incidentally one of the biggest shareholders of the ECB. And the reason that they've been critical of the monetary policy of the ECB since the bond buying purchase asset program was put in place has something to do with domestic attitudes. You have German savers who may have been a bit resentful of the fact that low interest rates impacted them in particular, and they've also felt that it incentivized the sluggish pace of reforms in other less savings-happy countries in Southern Europe like Italy or France. Now, Schäuble has also accused the ECB in the past of stoking populist attitudes. Remember, here in Germany we have the AfD, the Alternative for Germany party, and at their most basic inception they were originally founded on a philosophy of Eurosceptic thought. Now, the thing is, going back to the comments of Schäuble about how there's a case for ending unusual monetary policy because we've returned to a normal situation, that must mean that the unusual monetary policy has worked. We're actually seeing a return to economic recovery for the Eurozone. We've seen strong employment data. We've seen inflation picking up at 1.5%, still not quite at the target, but getting closer. Now, whether Draghi will say anything about these things, this is something that the market seems to doubt very much. The market has mostly priced in comments from Draghi as to the end of the quantitative easing program to come in October after the policy meeting tomorrow.